Hi, my name is Darren Joseph, HCJ.tax. Singapore is the undisputed financial capital of Asia. The rules, however, are very nuanced. As of the end of 2023, as we move into 2024, foreign source capital gains may be subject to taxation. Here are 5 things you need to know now. Number 1, Singapore is a very tax advantaged jurisdiction. It is super tax friendly. So this change to the taxation of foreign capital gains under Section 10L, this is a huge change. It's required to align Singapore's tax regime with international norms and to ensure that economic activity is firmly anchored and there's enough substance in Singapore. Number 2, previously, gains from the sale of foreign assets which were capital in nature were not taxable upon remittance to Singapore. As of January 1st, 2024, it may be subject to tax under Section 10L. When, upon being remitted to Singapore, if it's deemed that there's not sufficient economic substance in Singapore, or the gains are from the sale of foreign IP. Number 3, so this new rule hinges to a large extent on there being adequate economic substance in Singapore. And of course, it can be a bit subjective. It would vary from industry to industry and even vary within that industry as well, depending on your larger organizational structure. This creates a bit of uncertainty. Number 4, along with the requirement that non-pure equity holding companies need to be managed in Singapore, the following indicators need to also be assessed: the number of full-time employees, the qualifications and experience of these employees, the amount of business expenditure by the entity in Singapore, salaries, rent, admin expenses. 4, whether the key business decisions are being made in Singapore. Number 5, the economic substance requirements for pure equity holding entities are more limited since the range of their activities would logically be limited in nature. The requirements are that the entity needs to submit the necessary returns, statements, etc. 2, the operation of the entity is managed and controlled from within Singapore. And 3, the entity has adequate premises and human resources within Singapore. In summary, Section 10L is a huge change in the Singapore tax landscape. However, the Inland Revenue Authority of Singapore has published guidance on their website, and this is particularly important for those whose structure includes US transparent entities, viewed as, for example, treated as a partnership like an LLC structure. If you need further advice or support in either the structuring or compliance, please feel free to reach out to us at HCJ.tax.